back to the Invest Northwest Territories Remote Roundup Session 2, sponsored by the Government of the Northwest Territories and Invest Canada North. I'm Jessica Katrachak from VTV Business Television. The Northwest Territories is known globally for its wealth of diamonds. Further, is filled with mining potential that includes gold, zinc, silver, lead, cobalt, rare earths, just to name a few. And we're joined by another 3 pivotal resource companies in the territory for today's second discussion: Fortune Minerals, Norzinc, and Osisko Metals. Thank you to those of you who are joining us as part of AMEBC. You can find us under the hashtag Remote Roundup virtual event this year. We invite everyone to let us know where they're tuning in from and join us in the chat feature during the session. Our panelists and their teams can connect with you throughout the fireside chat, and be sure to submit your questions for the live question and answer to follow. Welcome again to our panelists. Robin, please give us a brief description of Fortune Minerals and what makes your company stand out.
Thanks, Jessica, and thank you for inviting me to speak at this virtual workshop, as well as to the Northwest Territories. So my name is Robin Goad. I'm the president and CEO of Fortune Minerals Limited. We trade on the Toronto Stock Exchange under the symbol FT, that's Foxtrot Tango, as well as FTDMF on the bulletin board in the United States. So our company is a company that's been essentially incorporated initially to work in the Northwest Territories. We've been there for 32 years, and we have a very exciting project called the NICO project, which contains cobalt, gold, bismuth, and copper. The project is situated about 160 kilometers northwest of the city of Yellowknife, 50 kilometers north of the community of Watee, and it will be comprised of a mine and a concentrator situated there, as well as a refinery in southern Canada. And we're very excited about the opportunity to participate in critical minerals. This is new terminology which refers to minerals which are being used for technology, typically new technologies, as well as eco metals. And our project will be producing cobalt sulfate, which is consumed in lithium-ion batteries primarily, but also cobalt is used in aerospace alloys. We have a little over 1 million ounces of gold in our mineral reserves, which will contribute a co-product, and we have 12% of the global bismuth reserves, which is a relatively small byproduct for the project, but we will be the largest producer in the world. And this project is very advanced. We spent $135 million to date. We've already been assessed in a bankable feasibility study. We've completed the environmental assessment for the development of the project in the Northwest Territories. We have the major mine permits. We've test mined the project. And even though it's an open pit, primarily deposit, we've also driven a decline ramp underground and collected large samples for pilot plant testing, verifying the process flow sheet, the commodities which we're going to produce, the recoveries. So it's a very advanced project. The refinery is also a great opportunity because our material will provide the base load for this facility. But then the business plan going forward is to be able to also process materials from other similar projects around North America, as well as waste residues and scrap metals, and also to participate in recycling. So this is a very interesting project and enabled by infrastructure, which we're going to talk about a little more later in the conversation. But there's a new access road being constructed by the government of the Northwest Territories, partially funded by the federal government. And this is a key enabler which is under construction, nearing completion, and allows our project to proceed.
Thank you very much, Robin. Don, Norzinc also has a very long history in the Northwest Territories. Can you give us a little bit more on its project background?
Sure. Thanks very much, Jessica. My name is Don McDonald. I'm the CEO of Norzinc. We're trading on Toronto Stock Exchange under the symbol NZC. And our project our major project is the Prairie Creek Mine. It was originally built in the 1980s as a silver mine, but when the silver prices dropped down, it was mothballed. in the last number of years, we've been focusing really on the zinc and the lead as well as the silver at the project. It is a project with a feasibility study which was completed just over 3 years ago. I've been with the company for just over a couple of years myself. And the feasibility study had a reserve of 8 million tons of 23% zinc equivalent and 27 million tons of 27% zinc equivalent. The focus of the revenue from that was for silver really was not large. It was about 15 or 16% silver at the time the feasibility study was done. But based upon current prices, we're looking at a revenue from silver of almost 30%. So silver is an important factor in the project. It's located in the southwestern corner of the Northwest Territories, close to the BC border and the Yukon border. But it's located about 150 kilometers inland from the Highway 7. So we need to build a road out to the sites, and that represents about 25% of our capital. So support for infrastructure is really important for our project developing it. But what we're focusing on right now is increasing the reserves. We have a plan to carry out an exploration program. We're targeting an increase of 50% in our reserves, basically adding it in from those 7 million tons of inferred resources that we have, and also looking at an increased throughput. We believe that we can increase the throughput by about 50% from the feasibility level with a relatively modest amount of extra capital. Those obviously will make this mine into continue the long life of it. It will still be a 15-year mine life, but it'll produce about 50% more silver, zinc, and lead than the original feasibility study. The original feasibility study had a production of about 2 million ounces of silver and just under 200 million pounds of zinc and lead. And obviously, we're looking at a 50% increase in those, which will make it a more significant silver producer. And we're hoping from our exploration this year to add extra reserves in, but also focusing again on the high-grade silver. The reserves are running at about 4 ounces per ton, and the resources are running about 5 ounces per ton silver. So it's a pretty good grade silver.
Oh, that's great. When you had mentioned that a lot had changed since the last time you and I had spoke a couple of years ago, you were absolutely right. So congratulations on that. Jeff, we interviewed Osisko Metals on our BTV Invest in Canada's North episode on BNN last year when the initiative first launched. So it's a pleasure to have you joining us again today. Can you tell us a bit more about Osisko Metals and what stage of development your operations are at in the Northwest Territories?
Thank you, Jessica. Jeff Hussey is President COO of Osisko Metals. We incorporated the company in 2017 and started looking for projects. And in 2018, we acquired Pine Point. In the last 3 years, we aggressively explored and drilled the project off. That's in the period we met. And we took the 2019 mineral resource base, which was 50 million tons of inferred resources at a equivalent lead plus zinc combined grade of about 6%. So Pine Point produced 64 million tons between the 60s and 1988, but they were producing at about a 10% lead zinc equivalent. Different from 90% of the projects globally that are underground, Pine Point is near surface open pittable mineralization. So we took that resource base and we started at the beginning, the first half of 2020, and we completed the PEA, very positive PEA in mid-year. We had an NPV of $500 million, an after-tax internal rate of return of 28.6, which is an excellent rate for a base metal project. And we're looking at this year in 2021, continuing to define resources, bringing them more resources that are drilled, but can be quickly brought into the indicated category for the feasibility study in the future. And also we're going to be looking at some of the capital expenditures, one including dewatering, our dewatering plan and management. We put a lot of dollars in the PEA. We're looking to reduce that. So we'll be doing a hydrogeological model this year, further de-risking the project. Looking again at the zinc prices this year because they're on the rise since the trench of COVID. We're somewhere between 125 and 130. Our study was done at 115. So if this trend continues, as we think it will, we would look at incorporating the work we do this year and bringing it into a PEA that we would update and release in the first half of 2022. We think through the zinc price changes, the reduction in capital expenditures, including the dewatering, and further indicated drilling, that we should be able to reduce costs, leading to even stronger financial metrics.
Very good. Thank you, Jeff. Okay, let's move on to the fireside chat portion of this. So I'm going to ask a few questions, and we can take turns answering. I'll just go in the same order that we did our intros in. Let's start with doing a look back at 2020. Now, earlier today, we spoke with the other panelists really about gold and rare earths. So I'm excited to get your perspective on gold, tech metals, base metals, and zinc. Is gonna be a big one, obviously, for this session. So, how did the year come together for you, for your company? In 2020, there was obviously some challenges there with COVID. How did you overcome that? And just working in the region of the Northwest Territories in general. So, Robin, we're going to start with you.
Sure. Thanks, Jessica. So obviously 2020 was a year of great uncertainty.
Yeah.
We started the year with relatively normal conditions, and then unfortunately this pandemic arose, and obviously that threw a bit of a monkey wrench into a lot of our plans. Fortunately for our company, most of the site work has already been done. So the focus of our work in 2020 was devoted primarily towards project optimization. So we were the focus of that optimization really fell into three different avenues. The first was mine scheduling. Our project is vertically integrated, comprised of activities that we'll do in the Northwest Territories, including mining and concentrating, and then a refinery. And quite frankly, the mining is very simple, low cost. The refining is where the money is spent. So the focus of scheduling higher quality material was part of the plan for this year, as well as reducing capital costs, and also working on an alternative refinery site, because we're looking at a brownfield site where we hope to be able to leverage existing facilities to dramatically reduce capital costs. We did do a little bit of exploration. We applied for and were awarded a grant from the Mineral Incentive Program in the Northwest Territories. We were a little concerned about halfway through the year whether we'd be able to actually conduct the field work to do this work. But we were able to do that, and we did a program of geophysics, because we have a very exciting opportunity in an IOCG or Olympic Dam style mineralization. And we looked at we did some geophysical surveying to test for potential expansions of that resource.
Don, how did 2020 shake out for Northink?
It was a mixed year. I mean, we were planning some site work to be done in 2020. We have water treatment that we have to carry out each year. And we were delayed by about 2 months in getting into site because of the COVID protocol that we had to work with the NWT on, and the local Indigenous people. Very important to keep the local community safe. But as this was going on, we were focusing as well on the potential for the project to increase its throughput and to increase its reserves. We had hoped to do a drilling program starting as early as September, an underground drill program. That proved just impossible. So we carried out a surface drill program late in the year, and we have a deposit which is 1.3 kilometers long. It's 400 meters deep, and it's in depth, and it's about 2 to 7 meters in width. And that's just the reserve. The resource is another kilometer down dip from that. But we carried out some drilling. We drilled just outside of the reserve envelope, and we hit 4 meters, more than 4 meters of over 50% zinc equivalent, with some excellent silver grades, well over 5-6 ounces per ton. And we hit a brand new zone which had 4 intercepts, which averaged total about 5 meters at over 40% zinc equivalent. So we're very excited by that program. But that got shut down because of weather. It got really cold on the site, so we had to shut it down early. we're hoping to restart that next year.
Very good. Jeff, how about what's 2020 like for Osisco Metals?
Well, like everyone, we were drilling in the beginning of the year. Once COVID started, we had shut down prior. We returned in the middle of the summer. We were on care and maintenance, but we came back. We had protocols. We had one drill turning for a fall program. We got excellent results. We were drilling some of the deposits. We pulled a hole of 29 meters of over close to 24%. So that's some of the prismatic mineralization that we were drilling. We want to get back and do more of that. But as I mentioned at the beginning, it was largely a Zoom conference period between March and mid-year, whereby we were working with consultants and doing a lot of conference calls to get the project advanced. So in that aspect, it worked okay. The camp was on care and maintenance. We started up again end of the summer. And then, as I said, we continued drilling till October, November, and we've continued to plan on the project for the second half of the year. So we've done a lot of remote work, but we were active on the ground.
That's good to hear. Okay, we've all chosen to explore and advance projects in the Northwest Territories. What makes it, in your opinion, an attractive area for mining and exploration? Robin.
Well, the first thing I should probably say is just how important mining is to the economy of the Northwest Territories.
Thank you. Yeah.
And so about 25% of Northwest Territories GDP is derived directly from mining, and roughly 45% with the indirect expenditures through service providers. So you have a jurisdiction where we have almost a symbiotic relationship. We really they need to be supporting mining because it is essentially the most important private sector component of the economy. Then I'd probably go on to talk about the endowment of the mineral endowment of the Northwest Territories. It's relatively unexplored, and we're talking about world-class mineral potential and mineral deposits that can still be found largely on the ground. So, for example, our company is exploring a unique mineral resource type called Olympic Dam, or IOCG. And some of these deposits, global analogs, including the Olympic Dam mine in Australia, is 8.3 billion tons. The Carajás deposits in Brazil are well over 1 billion tons. The Candelaria deposits in Chile have clusters of deposits which are well over 1 billion tons. So that's the kind of mineral potential that we're looking for, and whether it be an IOCG that I'm exploring or lead zinc deposits like Jeff and Don are exploring, there's world-class mineral potential here. We've seen that with the diamonds. We're the second largest producer of diamonds, I believe, in the world, but the diamond story, unfortunately, is coming to a bit of an end, and we have to develop new projects. So very important that the projects that we're talking about here today get developed to be able to sustain the operations. And I would just also have to point out that we have very broad buy-in from the Indigenous communities on mining in the Northwest Territories as well, for the same reason that the Northwest Territories government supported, because we have to have mining.
Thank you, Robin. Yeah, the geological potential in the Northwest Territories is huge. I mean, it's the second of the largest of the three territories, and it's, as you had mentioned, vastly unexplored. So lots more potential there for sure. Don, what, in your opinion, makes the Northwest Territories an attractive area for mining?
Well, it's because, as Robin said, it's got a lot of history of mining, particularly around Yellowknife, particularly on the gold, and then obviously more recently on the diamond side. But the potential, I think, really is on the base metals and on the strategic metals side, as Robin, Jeff, and us and myself have. There are more deposits available to develop of those high grade, whether they be cobalt, bismuth, or they be like Jeff and myself with zinc and silver and lead in them. The difference, though, is the economics for those are quite different from from gold. and diamonds. We have a lot of costs of transportation, and therefore, and our margins tend to be, I'm afraid, lower than they are for the diamond mines and for the gold mines. So infrastructure support is really critical. So it's great to do business in the NWT, but the infrastructure is a holdback for the potential development for many of the projects in the territories.
Thank you for that. Jeff, what is your perspective on, what makes the Northwest Territories an attractive area for mining and exploration?
Well, we were looking at the supply-demand fundamentals of zinc and looking for good projects. And with base metal projects, as has been mentioned, infrastructure is key. So we looked at many, many projects and used three filters. One was infrastructure, one was metallurgy, and exploration upside. We found all three at Pine Point. When we speak of infrastructure, Pine Point is part of the mining history of the Northwest Territories. They produced 25 years, as I mentioned, over 64 million tons. So they built a railway from Edmonton to Hay River and inward to the project. Part of that railway was removed since it closed down in '88. But we have a railhead in Hay River, paved highway access all the way to the project, and an electrical substation that's located where Cameco's former concentrator was located, and where we plan in the PEA, and probably where we'll end up, right next to that substation. So with those three large cost components, we're mainly looking at building the project again. On infrastructure, we also benefit at the site. There's over 100 kilometers of 25-meter haul roads. All of this is open pittable, so the roads that connect all these deposits that were mined and most of the ones that we're looking at, there's already haul roads that are in good condition. We just got to put a blade down. So having that infrastructure in place is key. Secondly, as I mentioned, Pine Point is a world-class deposit in itself. Having produced 64 million tons, we have a mineral resource estimate with 50. That's a world-class zinc.
Is there any advantages that kind of stick out in your mind to having a project in the Northwest Territories compared to other places in North America? I know you have something to say, Jeff. I'll start with Robin and then get his perspective there.
Well, I think we've really hit on the major advantages: the geological endowment, and the necessity for having mining in the Northwest Territories. You can't have fishing or agriculture or manufacturing up there. It's really dependent on the mining community for jobs, for tax base and wealth. I think it's been pointed out that by both Jeff and Don, the importance of infrastructure. Our project is also very critically involves infrastructure, and we were fortunate we went through a similar process to what Jeff talked about. If you're looking for base metal deposits, that the concentrate has to be shipped out to a process facility, then you have to have a mechanism for getting that material out, whether it be navigable water, whether it be railroads or trucks. And the government of the Northwest Territories, together with the government of Canada, are funding an all-season road to the community of Wati. And that, as I mentioned earlier, is a key enabler for our project. So we've been working with governments to get the support we need to develop our project, and we've been getting that kind of support, which we're very pleased with the acknowledgement of the importance of the project, and we've been working with governments to try and put together the critical components that need to go into a producing operation.
Thank you, Don. What advantages do you see, based on your experience, in the mining community for quite a long time, compared to working in the Northwest Territories rather than other maybe projects in North America?
Well, I think, one needs to look globally. I think looking in our area of zinc mines, they are located all around the world in some of the most difficult locations in the world. Our deposit, based upon reserves, so it doesn't bring in Jeff's deposit into that analysis, is the third highest grade zinc lead mine undeveloped lead mine in the world. The other two are in DRC and in Indonesia. And if you look at the top 7 in terms of size, most of them are in more remote countries and less stable countries than Canada. So I think the Canadian side is important to us. NWT is really good. The people we're involved with on the permitting side, on the regulatory side, are super supportive of mining, and that's really good. I think the downside of doing business in the NWT is just the cost, and it's just the problem of being in the north of Canada in general. Is the cost of doing business is so high. But so we have to be blessed with high-grade projects in order to compensate for that cost, which we, all three of us, are on this call.
Jeff, what is your perspective on this?
We've talked about this before on other panels, and Northwest Territories is a safe jurisdiction to be in. We're in Canada. The permitting process is known. For investors, that's important. And so one of the points that I brought up on another panel was the accessibility of the government. If you're in Ontario or Quebec with large governments, it can take a long while to communicate with the upper level of the Department of Natural Resources, et cetera, or some of the ministers or deputy ministers. But in the Northwest Territories, I think everyone on the panel would agree that we have good access to speak with the government. The Chamber of Mines, we're involved on the Chamber of Mines, all three of us. And it's a very well-connected network of people that are interested in the mining industry because of the points that Robin and Don have brought up. It's a huge wealth potential. When we look at exploration and development and why Canada is such a large mining strength, mineral potential is somewhat based on surface area, and the territories have it in spades. So there's lots of area. It's a lot of untested potential, world-class potential. I think that's the advantage of going to the Northwest Territories and developing. Sure, the costs are a little higher, but that's where you have to select your projects.
Well, let's talk about, I mean, we've already touched on infrastructure, quite a few times, and some of the positives, but let's talk about some of the negatives that need to be addressed in the Northwest Territories, and maybe some ways that, ideas that you might have to help fix that. I know you talked about high costs. I know electricity is quite high, I read, for costs in the Northwest Territory. So let's go through and maybe talk about some of the biggest challenges you see there, and some ways that you feel like they could be improved. So we'll start with you, Robin.
Sure. Good topic, because as Don has already mentioned, the Northwest Territories is a high cost jurisdiction. And we have an infrastructure deficit that is a study was done by the Mining Association of Canada and the PDAC, which indicates that capital costs for a project are commonly 2.5 times greater than similar projects that are located in the south. Operating costs are commonly significantly more, and that's because most mineral projects that are developed in the territories have to supply their own infrastructure. All three of the projects that you're hearing about in this session are located in the southern part of the Northwest Territories. And generally speaking, we've got pretty good infrastructure, particularly Jeff's project, which is a past producer, and Don's and our project is also close to highways. Power is expensive. You're probably looking at power costs of sort of between 25 cents kilowatt hour in the Northwest Territories versus, somewhere between, 4.5 cents in Manitoba, 6 cents in 6.9 cents, I believe, in Alberta, 7.2 in Saskatchewan. And power is a very significant component to our cost structure. Obviously, labor. If you're operating a remote camp facility, you've got to bring in particularly some of your skilled positions from the south. There's transportation costs involved with that, accommodation costs. So I think we kind of beat the cost thing a little bit. Also, regulatory issues. And access to land is certainly an issue. You've got land claims, which make land tenure a little bit more complicated in the Northwest Territories, as well as conflicting and overlapping regulatory authorities. But generally speaking, we like to sort of, we're all working in the Northwest Territories because we think the mineral potential exceeds the some of the negatives that are associated with high costs and
Right.
regulatory issues.
Mm-hmm. John, do you have anything to add to this?
Yeah, a couple of points here. You mentioned the cost increase, the higher levels of cost, and the power side here. For our project here, we are going to be producing primarily from LNG, so that is going to be a more environmentally friendly source of power. It would be really good if our power costs were lower, so that we could electrify our underground equipment and reduce greenhouse gases as a result of that. We have a very small footprint, environmental footprint, which is also good, just because of the way our project is designed with 100% backfill. It means that we don't have any big tailings dams. But in terms of the infrastructure access, the government, there are funds available. There's a thing called National Trade Corridors Fund, which is providing funds to support communities. And there's no question that mining, in two factors, our project and other projects, they will provide significant GDP to the country. We're looking in our feasibility study about $3.5 billion of revenue, and obviously we're looking at something being 50% higher than that in terms of, and that is exported primarily. 50% higher than that if we're successful with our expansion designs, and also we support the communities by employment. We have good relationships with our communities. I know there's going to be a question about that later on, but Rob did mention that. I think the community relationships are critical, but right now we feel very happy with those. But we would like some support with the infrastructure, because our road is more than 25% of the capital cost to build our mine is based upon the road, and having some support for that, because of the tremendous benefits to communities, would be very helpful for us.
Yeah. Thank you so much, John. Jeff?
Yeah, the main one I would touch on would be electricity. The Tulston Dam, there is room for some expansion and optimization, and we're talking to the Northwest Territories Power Corporation to see what we can do there. But there's also been discussions of a much larger ramp up at the Tulston Dam, and that would benefit the Northwest Territories very much so, because it's planned to bring it over to Yellowknife, reduce diesel power, and then go up the access road they're building through the Great Slave Geological Province, and help to generate more projects. So the challenge for the territories would be to get more cheap, green hydroelectric power. I think that would be a benefit to all, the residents and for proponents coming in to develop. I'd like to add as well, with regard to the communities, all of them are welcoming. They want to see the economic development, especially on the south side of the Slave, because the diamond mines were mainly located on the north side of the Slave, Great Slave Lake. And so I think that with the community support, with the territorial government support, I think we all have opportunities here to create value and move forward. That's the advantages. The power, the more green power you could get, we'll be doing some trade-off studies to see if we can further that. But as in Don's case, we included natural gas as a component to reduce emissions, and we will continuously look for ways to either reduce consumption of electricity or find green alternatives as much as is possible.
That actually leads into my next question, which is ESG. So it was one of the hottest topics, of 2020, and continues to be very relevant, and will obviously for years to come. Can you explain to me the processes within your companies to address investors' growing concerns and interest in seeing metrics met on ESG? So we're going to start with you, Robin.
Yeah, that's we could talk a lot of things about ESG. So
first, we have about 10 minutes left. Full disclosure.
So I mean, the first thing I've just pointed out is the commodities we're going to produce are very important for new technologies, but also eco metals for a greener planet. Bismuth, for example, is used as a environmentally safe and non-toxic replacement for lead. But I want to leave that because I think we should be concentrating more on the community benefits and the interaction we have with, particularly with the indigenous communities and governments. So our project's been discovered in '96. As mentioned earlier, we spent a lot of money, and we've always been working with the local Tlicho indigenous people and made them part of the project. When you go through an environmental assessment, you're also essentially balancing the important ESG sort of parameters, including the economic benefits, and balancing those with the environmental impacts as well as the social impacts. And we've gone through an environmental assessment, and that assessment was approved not only by the federal government, the territorial government, but also the Tlicho indigenous government, because we are in a settled land claim where there is a self-government and land claims already completed between the Tlicho, the Northwest Territories, and federal governments. And so we have our company's completed an access agreement with the Tlicho. We've got a cooperation agreement. We're working on an impact and benefit agreement, and we have a socioeconomic agreement also completed with the Northwest Territories governments, which has certain targets for northern and indigenous employment, training, social programs, all kinds of things. When you're developing and building and operating mines in all over the world these days, the local communities have to benefit. It's part of our social license, and we go through a very lengthy process to make sure that that's going to happen, whether through the exploration, through the permitting and the engineering, permitting, operations, and also through mine closure.
Thank you, Robin. Don, what are your perspectives on and some plans that NorthZinc has in place on the ESG side, as well as what your involvement is with the Indigenous community?
Yep. Well, as Robin said, mining nowadays, we take a tremendous amount of care to make sure that we are environmentally friendly. The rules in the Northwest Territories are some of the most stringent in the world. Anybody who's involved in building a mine in Canada, but particularly in the Northwest Territories, can be rest assured that we are meeting the most stringent standards. So that's very great for the environment. In terms of the Indigenous communications and communities, as with Robin's project, we have a socioeconomic agreement with a dozen different communities, 9 different First Nations, and we have a arrangement on a first name basis with the leaders of the 3 most important nations in our community here. We take it at the highest level. The chiefs like to talk to the senior people, and as a CEO, I directly interact with them on leading all of the negotiations with the communities, which, like others here, has been very positive. So I think it's really important that we have that social license, and I think we in Canada in general do that in quite a good way. I think mining in particular does it in an excellent way with the communities. The one area that we do, and dealing with the NWT and the government has been very good. We do have one area that I think some of us are suffering from, and that is the regulations with regards to mine development permits, which is where all of us are in. We're in the mine development. We're not in the exploration side here. We have a water license that gives you up to 25 years, which is essentially life of mine. But we have a land use permit, which gives you 5 years and then another 2 years beyond it. And there's a movement to discuss that we need to align. Once you're going to get your permit for a mine, that you need to get it for the life of the mine and not just for 5 or 7 years. We already got our permits to operate the mine in 2013, and we have now gone through a renewal process for them, which really, isn't like what happens in the rest of the world. So that's an area that needs to be improved.
Awesome. Thank you so much, Don, for that perspective. Jeff, let's move on to you on this topic.
Yeah, sure. Well, safety, environmental stewardship, social responsibility. These are core values. In all angles, we've all been in the industry for a long time, and we've been developing this approach along with everyone in the industry. And as Don said, we have very stringent regulations. So we follow all three pillars of ESG. With regard to agreements, early on, I'm a little earlier phase than both Don and Robin. We're trying to move fast to catch up. Yeah, we have agreements with the NWT First Nation and Fort Resolution, and a collaboration agreement that was announced last year, in 2019. And so with the collaboration agreement with the NWT First Nation and also another one with the Northwest Territory Métis Nation, we were able to advance and expand our ground to incorporate more resources, and that was rolled into the PA we mentioned at the beginning of the call. So you can see there's quite a lot of collaboration to try and get this project going. And with the Kataloditche First Nation and Hay River, we've had an exploration agreement since 2017. There's a little less work in that area, but we're constantly communicating with all three communities and trying to develop what was mentioned by my co-panelists, opportunities for employment, opportunities for training. We're looking at that right now as well, and other benefits that will come. But we have to get through the development and permitting phase in order to really generate we'll call it the lion's share of the benefits that will come during production. So at this stage of resource development, we're not a cash flow company, and we do what we can. We get out there, we meet with all the people we can, and we talk about the permitting stages and the impact benefit agreements that will come. Those discussions will be increasing. Now that we have our PEA in hand, we'll be talking about these benefits and benefit agreements as we go towards our permitting.
Thank you so much. Okay, we have about 2 minutes left before we need to jump into our question and answer live session. So make sure, I'm hoping that everyone's getting their questions in. Keep them coming, and we'll get to them really quickly here. But before we jump into that, I just want to get everyone's perspective outlook for commodities for 2021. We mentioned a little bit earlier, some positives that came out of 2020. So how do we see, we're at the beginning of 2021, how do we see the rest of the year kind of shaken out, for zinc and cobalt and base metals? Let's start with you, Robin.
Okay, again, I'll try to be brief because this is
okay. Thanks.
So our primary commodity is cobalt, and we are one of the most advanced development projects for cobalt in the world. Cobalt is a critical mineral. The U.S. has a list, the European Union has a list, and these are minerals that have essential use in manufacturing or defense industries and new technologies. They can't be easily substituted, and their supply chains are at risk. And why the cobalt supply chains at risk is because 70% of the global mine production comes from not so democratic Republic of the Congo. About 50% of that production is controlled by China. 65% of refinery production is controlled by China, and about 80% of cobalt chemical supply is controlled by China. So there's been recognition, broadly speaking, in governments, particularly in the European Union and the United States, about the dangers in having geographic concentration of supply. And supplies that can be influenced by policy risks as well as political instability. So both cobalt and bismuth are critical minerals. We think the outlook is extremely good, particularly for cobalt because of electric cars. With growing adoption of electric vehicles, we expect that the cobalt market will exceed its historical growth of 8% CAGR, compounded annual growth rate. And we're expecting the market to double or triple over the next 10 years, primarily on the back of electric cars and stationary storage. Bismuth, a little bit similar. We have 75% of the production controlled by China. very important metal with critical physical properties that can't be easily duplicated. And then we have over 1 million ounces of gold. And gold, we hope will continue its upward trajectory. We've had a bit of a down day today, but we personally expect gold to be in excess of $2,000 an ounce US. And we're also expecting the cobalt price to recover to its historical average of around $25 per pound.
Very good. Don, what is your perspective on the zinc outlook for 2021?
It's very positive. We have seen it was in a kind of a doldrum over the last few years here. It did peak at $1.60 a pound in February of 2018. Our feasibility study was done at $1.10 a pound. We're now at about $1.26, 27 today, which is good because it was languishing below around $1, and I think below $1 for a period of time. Long term, it is great for the environment. It's clearly, as Jeff I'm sure will tell you, it's got lots of usages beyond just simply galvanizing, but it's a great commodity. For us, silver is also important. Silver has really broken out. It's down a little bit today, but certainly if it's in the $25, $26 or above per ounce level, that's very critical and important for us. And we've got a long life project as well here. So with 15 years of life, that's right now, that you're able to hit the cycles, and that's really important in our industry, not just what it is today, but what it's going to be over the next 15 years.
Mm-hmm. That's excellent. Jeff, what is your perspective on this?
For 2021 and beyond, we're very bullish on zinc. COVID, obviously, the production is reeling a little bit, having a hard time catching up with that constraint. But in the past several years, there's been large zinc mines that have shut down worldwide. Supply is diminishing. We're at critically low levels, 200,000 tons a day, 300,000 are about 10 days supply. That's when you get out of critical. Mm-hmm. And what we're seeing now is that the uncertainty that we're just getting through, which has benefited mainly the gold price, which is a typical mining cycle. Gold comes in strong when uncertainty is high. And now that we have a vaccine and the elections completed, basically we're going to see huge stimulus globally to get the economic development that people want to see in the global economy. There's not huge numbers out of China that are stated what they would like to build out. The Americans also have old infrastructure. Here in Montreal, we just spent a lot of money on infrastructure because after 50 years at Expo 67 here, the steel rusts. So China right now is putting out huge amounts of steel, producing 60% of global steel as usual. Iron ore prices are very high. So half of that steel has to get galvanized. And on critically low inventories, we think it's looking very bullish for zinc going forward and also for lead.
That's excellent news. I think this is a great point to end the fireside chat portion with our panelists here as we second session for Invest Northwest Territories. Again, you can find us at #RemoteRoundup. We're going to do a quick thank you to our sponsors, so please don't go anywhere. And then we're going to jump right into the live question and answer period with our attendees.
What are the sources of energy currently? What are the opportunities and plans for using renewables?
We've done a lot of sensitivities in working our project forward. We've looked at, we're only 22 kilometers from the Snare hydroelectric facility. However, there is unfortunately, there's not a surplus amount of power that we can utilize. So connecting to the grid is something that is a future opportunity. So we've looked at compressed gas. We've looked at green energy alternatives, including wind and solar. And what we're settling on right now is building a turnkey natural gas LNG fired system where you're not only getting the energy from produced from natural gas generation, but also the heat recovery with glycol heat recovery systems, which is also very important in the energy component to operating in northern jurisdictions.
Very good. Thanks so much for that. Let's move on to you, Don.
Yeah, the old mine, the old Cadillac Silver mine, was built with diesel power on site. We've been using diesel power since we took over the project in the 1990s. But our plans for development of the project, our consumption from the feasibility study was a maximum of 11 megawatts. With a 50% increase in throughput, that will go up. And our plan is to do a co-production that is primarily focused on LNG, but when there are occasions when the LNG may be down, you've got the capacity to switch to diesel. So that's our plan, and definitely it's a great improvement environmentally over the original design for the project. With diesel, the other factor that we would hope to have, and maybe we will have, and that is the ability to mine underground as an underground operation using electric equipment. But that's in early days right now. That's just it wasn't in the feasibility study, so it's something we're considering right now. Bring us into the forefront because that's where the business is going. Underground mining with electrification is the way to go, and Canada is leading that in the world.
Yeah, absolutely. Thank you so much. Jeff, let's get your thoughts on this.
Yeah, well, Pine Point benefits from the Tulston Hydro Dam being built and connected to our site. So we have the substation already where the former Cominco concentrator was. Currently on the grid, there's about 5 to 8 megawatts, depending on the season. There's a potential to increase that by potentially 4 megawatts in the shorter term. And we will be working with the Northwest Territory Power Corporation to see if we can at least crystallize that. We look forward to that further expansion discussed earlier during the panel, which would help all of us, I think, if the power dam could increase significantly. But to your question, we're using as much of the renewable hydroelectric power on the grid that it will be available. And then we will combine it, as my co-panelists have just said, with natural gas to generate the power needed and try to reduce emissions that way. And in the upcoming PA that we're going to look at, the other thing we want to do is try to reduce consumption to start by reducing power requirements where we can.
Very good. My next question is just directed to Robin. Robin, can you talk a bit more about critical minerals and their importance in, North America to the economy?
Sure. So we talked a little bit about critical minerals before and how they're defined, and that both the United States and the European Union have got critical minerals lists. But critical minerals are a little bit different than traditional base metal deposits, and they can't be processed in conventional smelters. So typically we need to build our own vertically integrated hydrometallurgical facilities, which does increase the capital costs for the development. So we're looking at a transformation that's happening in the automotive industry right now, where I've got a picture in my head of a 1913 image of New York City. And it's there's absolutely no automobiles in that picture. It's all horse and buggies. And then just a few years later, there's no horses left. It's all cars. And we're going through a transformation right now in the automotive industry into electric cars, which has not really been seen since that latter sort of transformation in the automobile industry. So we have to have the raw materials that are going to supply the key raw materials into the batteries, for the drivetrains, for the components that are in this automotive industry. And if we don't, we're not going to have a manufacturing sector. So I think that has to be understood that raw materials are essential to sustain our manufacturing sector. And that really means that our high standard of living, which is dependent on the revenues generated from manufacturing and raw material production, and the social programs that benefits from that, we need to get new projects built as soon as possible, and we have to have those materials produced in Canada. And when I say produced, it's not just mining them; we have to do the processing here in North America, because if you simply export your raw material to another jurisdiction, you're not making those materials available to the manufacturing industry here in our domestic economy. So we have been working with the federal government, we've been working with the territorial government as well as provincial governments in trying to enable support for processing plants that will allow those materials to be produced here domestically and to sustain our industry.
Very good. Dawn, I actually have a question just directed to you now, and it's about weather. Does weather have an effect on your project? Bit of an interesting question there.
Well, yes. I mean, we are in the northern Canada, and it gets very cold at night time, and during the winter months. So you have to build a project that will deal with cold temperatures, which is a skill that Canadians have, and a lot of firms. I worked for De Beers for a short period of time, and when I worked for them, they had at that time and just 20 years ago, that they had very little knowledge of building in a cold climate. So, we got warehouse, we got to deal with the construction in cold climates. We do have extraordinary benefit in the Northwest Territories for those that can build ice roads that they are possible. And in fact, our road access to the mine as it's going to be built includes an ice bridge process that will be used during the winter. So cold temperatures actually help us there. But you have to recognize that the weather will affect the way that you're going to carry on your activities. We are blessed. I'm not sure whether it's the same for Robin and Jeff's location, but we're blessed with an area which is, although it gets cold, it is dry and it has very low snow. I was involved in projects in northern British Columbia, and they have humongous amounts of snow. So we do benefit from that in our location, that we don't have a lot of snow, which can create a lot of problems with transportation.
Did anybody else have anything to add on for weather related?
I would only just point out the fact that all three of these projects are situated in the southwest part of the territories. If you look at the diamond mines where they're operating right now in the tundra, they've been successfully conducting open pit operations for 20 years. Weather is not going to be an issue for mining in the Northwest Territories. We in Canada have proven our ability to operate successfully, not only in mining and concentration and the support facilities that are required, and we can do that in an open pit mine virtually at temperatures as low as -50.
Did you have any other anything to add to this? Otherwise, I have a question directed towards you.
I concur with my colleagues here. We work and operate in the subarctic and further north. The Polaris mine was much further north. On the south side of the Great Slave Lake, we benefit from, it's a lower snowfall, but there's nothing stopping you from operating in winter months. And at our project, there's no permafrost. Where I used to work at Raglan, the rock was frozen to 500 meters, so we don't have that to worry about.
Awesome. Thank you. Okay, Jeff, I have a question that's directed towards you, and then I have some more group questions too to get to, and keep them coming, everybody. What makes the Pine Point project unique, Jeff?
Well, the Pine Point, one, having been in production before, it's a brownfield project with all the infrastructure there. As we said, the railroad head is at Hay River. It was built for this project, the Talston Power Dam with the substation on site, and about 100 kilometers of haul roads that exist from the Cominco era. So on the infrastructure side, it's very beneficial. Could you just repeat the question again?
What makes your Pine Point project unique?
On the unique side, yeah. So the thing about it's like Polaris and some of the Mississippi Valley type projects down in the southeast of the States. And these are typically lead and zinc in limestone, contrary to some other deposits where VMS from the Bathurst mining camp, there's a lot more pyrite, iron, acid mine drainage, etc. With the limestone presence, there's a less of an environmental footprint. The difference in the geology also makes a difference in the processing, where there's, again, lead, zinc, and limestone. Well, the recoveries are exceptional. We get into the high 80s, low 90s for both lead and zinc. So our recoveries, which is one of the key variables of an economic formula, is to get good recoveries. On top of that, we have an exceptionally clean concentrate. It's probably one of the cleanest concentrates in the world. Right now, many zinc projects are delivering concentrates that have deleterious elements, and that's the name of the game with traders and smelters. They receive different profiles of different concentrates. All of them are going to need a little bit of fine point to dilute down the deleterious elements in their concentrates. What makes it unique as well is all of the mineralization is above 125 meters, so we're mining open pit. 90% of the zinc projects are underground. Most of the infrastructure is there, and as I said, we just put out our PEA last year with exceptional results, 500 MPV, $500 million MPV, with a 26.8 internal rate of return. So these are strong, fundamental economic metrics that we think we can improve on with the work of de-risking that we're going to do this year and put out our second updated PEA in the first half of 2021. We should be able to reduce the cost, and we think we'll be in a different price regime due to the government-backed stimulus packages that are on their way with this, what I consider an inflection point in the next couple of days during the change of the American election.
Thank you for that, Jeff. Our next question was actually asked at our first panel question and answer as well. It's a really good one. Comes from Hart. He wants to ask this group the same question. Are there opportunities for Indigenous-owned service companies from outside the Northwest Territories to provide support in the areas of Indigenous engagement and environmental services? If so, whom can we connect with to discuss? So we're going to start with you, Robin.
Sure. I guess first we have to say that we've completed a socioeconomic agreement whose objective is to primarily maximize the business opportunities to northern residents, but also Indigenous communities. So having said that, it's virtually impossible to run a mining operation on 100% owned local employment and business providers. So absolutely, there's going to be opportunities. We will go through a tendering process. That will be a scoring process, which we expect that obviously local businesses are going to have a certain advantage because we want to be able to have the benefits provided to local communities. But mining involves a lot of different skill sets and knowledge and expertise, and we will be counting on these services also coming from outside of the Northwest Territories.
Excellent. Thank you. Over to you with that same question, Don.
Yes, we're in a similar situation to Robin with a socioeconomic agreement with the GNWT, which has a hierarchy. Initially at the top level, it's the directly local communities, and then it's a little bit wider community area, which covers, I think I misspoke here, I think it's 12 First Nations, 9 communities. 28% of the communities in the Northwest Territories are a part of our socioeconomic agreement. But then it goes to the Northwest Territories and it goes to Canada. And just the same way as it applies with Fortune Minerals, we're no doubt going to be using people from other parts in Canada. In our case, our transportation is likely to go through Fort St. John and perhaps Fort Nelson and perhaps down to Fort St. John. So there are Indigenous groups there that definitely can benefit us. The questions seem to also talk about environment, particularly, and just want to mention with us, we have an environmental management agreement with our local communities in which they have representatives who monitor the environmental management, particularly on our road access. So that's an area where we have our direct communities directly involved in the monitoring process, and I think that's critical for our project. But then finally, in terms of the businesses, we are encouraging through a series of different agreements, local businesses. We have stimulation programs We do them directly. We also do them with organizations like the Mine Training Society. We do that with Aurora College. They are part of what we call the NWT Regional Committee, and we involve, all of the local communities within that committee structure.
Wonderful. Thank you, Don. Jeff, over to you.
Yeah, right now with at an exploration stage on the site, we've been doing our best to reach out to the communities, have some local, either through us or our service suppliers to work on the project, some training, limited at this stage on the training. We're looking at developing more opportunities in training. At this early stage, as I said earlier, the lion's share of the benefits and the service requirements are going to come when our projects are shovel ready and go into construction. And that's what we're all striving to do. At the earlier stages of exploration, it's a little bit more limited just due to the level of activity. But if any one of these projects continues on, gets the permits, that's where a lot of services will be required. And I think to the question where service suppliers outside of the territories would to reach out to us, and we're open to listening to collaborations. But right now, with the limited amount of activity, we're focused on our local communities with the level of work at this point in time.
Okay, very good. And I think the question was asked there who to connect with to discuss this, but he can certainly email me, Hart, and I could forward your email off like we had mentioned in the earlier question and answer too. And I'm just jessica@b-tv.com. Easy. We have another question here for the group, and it's been asked a few times, so I'll just kind of paraphrase here. Would there be an interest in information on the anonymous mobile clean energy system? If you guys are familiar with that. So we'll start with you, Robin.
You're going to have to rephrase the question because what exactly are you asking?
I think it's autonomous.
Yes, autonomous. Yes, thank you. Mobile cleaning energy system and autonomous mining on the horizon in general for any of your
autonomous
projects.
Equipment generally. Yeah, sure. It's certainly coming. It's actually a big threat to local employment because at some point you're probably going to be able to operate a scoop tram or a haul truck remotely, it's the automotive industry is also heading that way as well. So it's inevitable and something that we're going to have to manage around and ensure that that local businesses and also employees benefit from our projects. In terms of energy production, I mean it's constantly evolving. Energy is the second highest cost component in mining operations. We're hoping that we're actually going to go into renewable energy, and I don't know how that's going to be autonomous, but there is a run-of-river project about 50 kilometers south of our project, which we hope will get developed within the mine life of our asset and contribute energy from a green renewable source. In the meantime, we're using natural gas or LNG to start the mine up. I'm not sure if that answered the question because, but in terms of autonomous equipment, it's inevitable. I'm not sure about the energy.
Okay, Don, over to you.
Yeah, we're underground operation. A lot of these autonomous systems are used in open pits, particularly in Australia, where they'll have people in Perth, running trucks that are 1,000 kilometers away. With underground, the kind of what we do have and we will have is there'll be a certain level of a remote underground. I was in an underground mine 20 years ago, and the scoop tram was basically directed from a control center underground, where the person could see where he was scooping the ore from, and it was really a safety thing. The technology has advanced significantly here, but I think it's kind of our big area would be the potential for electrification underground, and then ultimately We don't have an open pit. We never will have an open pit on this project. So I think there's less scope for us in terms of it. So we will inevitably be requiring skilled people to help us with the mining. And on the energy side here, the actual underground equipment doesn't consume a huge amount of energy. The biggest energy consumer is generating power for the mill.
Thank you so much, Don. Jeff, what's your perspective on this?
Well, as was said, automation is here to stay. Everything from when I used to work in concentrators where there was people adjusting all the levels of the reagents, that's run by algorithms now, and double-checked and triple-checked. They have significant amount of automation within the mill. That reduces some walking around on the floor within a mill. Underground, we have very limited underground, but in a larger underground, it's, yes, automated trucks from distance, automated drills are coming more and more. Where we see a possibility that we did discuss within the project is we have 47 different pits that we're going to be mining the shallow mineralization from. So putting a drill, maybe the small drill, the drill and blast, could be automated with a pattern. But once blasted, the rock to haul it out of the pit to get it to the road would be difficult because the pits are small. You see automation in large iron ore mine pits or other larger pits. However, when we want to haul that truck all the way to the concentrator to dump a load, that could easily be automated. So in other words, one person at an open pit could be driving 3 trucks in and out of the pit and then just getting off on a stage and letting that truck do the long haul, hop on a new truck, go back in the pit, etc. So that's where I see the potential in our project. We do see some automation in the concentrator as well that will be integrated, where as all concentrators are highly automated now. And you'll be able to do that I think it's going on 15, 20 years now. You can have your mill on an iPad. You don't have to be sitting in the concentrator watching a monitor that's connected to the floor. You can look at it on an iPad from any distance and see what's going on in the mill, what are the reagent, whatever level of detail you would want, which is also an advantage for that kind of work. But all in all, it is coming, and it is one of the significant ways to reduce costs in operations. And at the end of the day, that's one of the sets of rules we have to abide by. It has to be economic, so lowering costs is always an area we look at.
Thank you so much for that. I think we have time left for a few more questions here. Robin, this one's directed to you. Can you tell us a little bit more about the Nico deposit and what makes it unique?
Yeah, so I did touch on this earlier, that it's an IOCG, which are very large mineral class. And ours is a little bit of an unusual deposit in that the economic metals are gold and cobalt primarily, with a byproduct bismuth and copper. We have a satellite project, Sudayan, which is a 10 million ton deposit of 0.8% copper. And being an IOCG, we think there is tremendous exploration opportunities. The deposit itself, our deposit is 33 million tons right now, 33.1 million tons. We have another 10 million tons in Sudayan. But we expect that there will be significant exploration expansion. Both of these deposits are open along strike and at depth. The geophysical anomalies that are associated with Nico itself are 20 square kilometers in size. We have the largest and strongest hydrothermal potassium anomaly ever found by the Geological Survey of Canada associated with the deposit. And that's about 15 square kilometers in size. So what this is more or less saying is we have an enormous hydrothermal system with a class of mineral deposit that is typically much larger than the ore reserves and mineral resources that we've already identified. And we're expecting that there will be significant expansion of this asset in the future, which bodes well because you're investing money in infrastructure, investing money in a processing plant, and the more tons you can put through that and amortize the costs that are associated with that infrastructure and those facilities, then you're getting a better bang for your buck. And it's also good for the ESG because mining is a temporary land use. All mines close down. We're seeing that the impact of that with the threat of the diamond mines closing over the next few years. So to be able to have a long-term mineral deposit that's providing employment, providing tax base, providing economic opportunities for local businesses, it's good for everybody.
Excellent. Don, this question is for you. Is Norzinc a zinc company or a silver company?
The answer to that is yes.
Oh, okay, well, there you go.
So it's, historically the project was built, as I said, in the 1980s as a silver mine, a Cadillac silver mine. It has a super high, good high grade silver, one of the highest in the world, but there are some that are spectacularly higher than us. And we have very good zinc and lead grades. I mean, our combined, Jeff's project is a great zinc mine. We have great zinc and lead. Our combined zinc and lead is 16.7% on the reserve side. That's a diluted grade. And then we have a total of 23% zinc equivalent on the when you combine the silver into it. But we also have a reserve, that contains over 30 million ounces of silver at good grades, 4 ounces per ton diluted, and we have the potential for higher grades. Our resources are at the 5+ ounces. I'll put it in grams. We have 200 grams per ton of in our silver, and we have intercepts that have gone up to 500 grams per ton in the silver. So it has a good silver element to us, and it's still only about less than 30% of our revenue. The zinc is probably 40 to plus percent, and the lead is the balance. Our lead, silver concentrate will contain most of the revenue, but the silver is very important from a market viewpoint. The valuations that are given for base metals versus the valuations for precious metals are significantly different. My previous company was a copper gold company, and you end up with a better valuation where you've got a byproduct that is a precious metal. As Robin has, so silver is critical. If we didn't have silver, this would not be a mine. If we didn't have zinc, it would not be a mine. But the biggest revenue comes from zinc. But from a market valuation viewpoint, probably the silver is more important. And that's why we're doing drilling last year and into this year, focusing as well as developing extra reserves, but also focusing on some silver-rich areas.
Perfect. Thank you. Jeff, we have a question here. What is a key objective that you're most excited about for 2021?
Well, we just put out our outlook for 2021, where our drill is turning on the back of last year, mid-year, having a PEA put out with very interesting economic metrics. Again, 500 million NPV with a 26.8% rate of return. To us, we consider that a starting point. What we're doing this year is not as much drilling. There's going to be a drill turning, and we're going to be testing the higher grade deposits on the site. There's two different types. Some of the intersections we've got there was about 30% combined lead zinc over 20, 30 meters. So we want to go back in. Those deposits are drilled off, but we have no current drilling in them. So we need to drill those, at least get up 1 or 2 holes. So the holes are going to be multi-purpose holes. They're going to be to bring in some indicated high grade, significant resources. We're also going to drill them to a diameter where we can do hydrogeological testing to enter that into our water model, which is one of the ways we want to reduce our costs. We'll be doing metallurgy on that material, and all of that together will be rolled into a PEA at the end of the year. So the hydrogeological data that we're going to get, combined with the historical and everything we're combining, we'll bring that into the PEA to reevaluate what we consider will be needed to pump during the mine life. And we think that our conservative estimates during the PEA, we have a lot of upside. So with a more refined model, we'll be able to show that. So that'll reduce the costs. And I think very shortly here, we're going to be submitting our environmental assessment package, which is the beginning of permitting.
Perfect.
So we have been working on it, project description, we've consulted with the communities, and now we're just about ready to submit it to the government. That will start the permitting process. So that combined with everything rolled into the PEA, the project is on track. We hope to push it as hard as we can in this context. And the beauty of it is for Don and I, as I said earlier, we're very bullish on zinc. We think that the supply side is going to be under strain in the short term and even in the long term. There's not a lot of exploration and development that have gone on.
Mm-hmm.
Don's project has been around for decades, so has Pine Point. There's not a lot of work with new discoveries, new projects coming on. So that supply side is going to be constrained as all these government-backed infrastructure projects are going to come on, pulling on critical low levels of inventory. We think it's a perfect storm in the zinc space, and we're getting ready to meet that opportunity along with the stakeholders and the local community.
Excellent. Well, that went by so fast. We only have about 2 minutes left here, but I really want to give you guys the opportunity to leave investors that are watching with a final thought. So if we can just keep it brief. But Robin, let's start with you. Any final thoughts from today's session?
Sure. I'll just focus in on our key milestones for this year, which are finalizing the refinery site. We're looking at brownfield sites with equipment already in place, permitting already in place to essentially accelerate the development, reduce capital costs, project optimizations, project financings. A key one of the major challenges for this year is to bring in the money to develop the asset, and we're also continuing to engage with governments to help enable critical minerals projects and help Fortune Minerals be a participant in the electric vehicle transformation that's taking place.
Thank you. Excellent. Don, your final thoughts from today?
So Northink, it's an extremely high-grade deposit. It has a lot of extra silver in it. It is very advanced in terms of the permitting process. We already have the permits in place for the initial design of the feasibility study at 1,600 tons a day, and we're going through a process of doing pre-screening to increase that to 2,400 tons a day. We, as part of our activities this year and into next year, we are working on a major initial financing, which will enable us to go on the ground to drill out the extra reserves that we need for part of our ultimate financing that we're planning for the middle of 2022. We're working on an updated feasibility study, which will include that extra reserves, but it also will include our extra throughput, and the design work on that is underway. We are planning, even before we actually get the full permits, to potentially start to build the first phase of our winter road Q1 of next year, so a year from now. If everything works out, we'll be starting construction with the full project financing in the middle of 2022 and being production by the end of 2024. Lots got to line up with that. I mean, there's a possibility things won't quite line up and will be shifted by a year, which would still be 2025 production. But it's critical. We have a 15-year mine life here, long-term production, and certainly a company that will benefit from exactly what Jeff said, which is this improvement and need for infrastructure support around the world. And you're seeing that in the United States right now as I speak, where the metals companies are doing much better than the high-tech companies.
Excellent. Jeff, we have about 30 seconds left. Any final thoughts that you want to leave investors with?
Well, what we all just stated and what we're reading in the media is we're going into a bull commodity cycle. And even the word super cycle is coming back from the early 2000s, where China's demand outstrips supply. on its own. And we're seeing that in the iron ore space with high prices there, copper, et cetera. So I think with the potential of a super cycle with this government-backed stimulus, I think all of our projects will benefit, and that'll lead to benefits all around.
Excellent. Well, thank you all again for joining us today. It's been such a pleasure to sit down and speak with you. I know everyone's busy, but it was great to have everybody here throughout the morning. And thanks everyone who was watching for joining us for this Northwest Territories remote roundup session. And thanks, that was brought to you by the government of the Northwest Territories and of course, Invest Canada North. I'm Jessica Kaczmarchak from BTV, and it was a pleasure. And thanks again. We will see you next time.
Thanks.
Thanks.